Hey, Sean, what do you think in terms of industrials and how AI is impacting it, and what we're how we're evolving, how we're looking at things maybe differently or maybe the same?
Sure. I think one of the really helpful things about looking at the industrial space and its impact of AI is I think a lot of the ground truths of the businesses that we're looking for stay very much the same. And covering the industrial space for some time now, some of the things that I've thought about that are most important and durable is at the end of the day, professional customers should continue to look for differentiated products that bring value to what they're doing for their jobs. And they're doing it, and they're looking for high quality, reliable, and durable products that are serviced and have the ability to be serviced by high quality distributors and servicers in the field. And that should stay regardless of whether the next LLM can answer whatever question or do that via a chatbot. And so that gives me a lot of comfort that the industrial businesses that we own and have exposure to and continue to try and find possess those things. And then the second piece is as we kind of go through this period of economic disruption and uncertainty is I think a lot of the incumbents have scaled positions that I think we can also take advantage of. And so as we find these industrial businesses that have good scaled positions, if they're managed by strategically and competitively minded managers with their doing a good job, is they can take advantage of the disruption to try and capture some market share and additional volumes.
I think that's a really good point, because I think the disruption is what we're trying to avoid. Because I think about technology. I know we're talking about industrial, but technology is where disruption always kind of comes into play. We don't want to be in the taxi business when Uber comes along. So I think for us, the way I'm thinking about it too is, and frankly, in all our companies and all of our industries and sectors, is we're trying to find these businesses that maybe are not all in on AI.
Yes.
Also, though, but have some exposure to it. I think of a company that we own, for example, called MCOR, which is they're a contractor for large infrastructure projects. When we bought this thing in 2020, data centers weren't even being talked about, and now it's like 15% of their business. So it's interesting how we can kind of hopefully participate in these green shoots in these companies without being totally in. I think the problem right now is a lot of these companies that are really have the tailwinds and the benefits are the ones that are all in on AI. They're pretty much, their whole business is really, and that customer concentration helps them now. Later on, I think will actually be a headwind for them. So I really think we're trying to focus on companies that have some exposure to AI, but still are very diversified. So when things do go sideways, they still have a good business to fall back on. Do you think that's fair?
I think that's great. And I think I can piggyback on that and provide several other business examples that we own that are all largely tied into the water infrastructure space. And that's Zurn Elkay, Watts Water, and Advanced Drainage. And all of them are having exposure to data centers, but it's not a material piece to the business. And the way that I've thought about it as these businesses have this exposure and are benefiting from the growth in data centers is that there are ebbs and flows throughout the economy, this entire piece, throughout the economy as a whole. And while the residential housing sector isn't great and all those businesses are feeling the impact of that, they're also getting the upside of data center. And at some point, I'm sure the data center will pull back. And the idea is that you can play at different end markets, and different end markets will ebb and flow over time.
Yeah. I was also thinking about another company we own in a couple of different portfolios is Exponent. So that's another one where it's mostly a human capital market, right? So they do consulting for healthcare and for industrial, and now they're going to hopefully utilize that for the AI infrastructure as well. So I think this is why for us, we think we can take advantage of businesses that are going to capitalize on AI, but are not subject to the risk that other companies are. Again, diversified, low capital intensity, everything that kind of fits our model, so to speak, like that. So I think there's ways we can do it. The problem is right now is the companies being benefited are the ones that are all in. And that's what's been the headwind for us right now. However, valuations eventually matter, and longer term, these companies cannot keep growing at the rate that they have, and that's when we think the capital kind of gets redirected towards us. So it's kind of the tailwind we think will happen longer term. But in the meantime, I'm just thinking about, again, the companies what in particular are you looking for in your businesses that you own now, as it maybe a cautionary tale? What do you I talked about that disruption earlier, right? Are there any businesses that you own that you're oh my God, I'm worried about maybe it being the next, Blockbuster or something like that? Or are there any like that out there that you worry about?
I don't think, nothing comes top of mind of that. I think that there's huge disruption risk of any companies that I cover that we own at Kayne. But what I do think is important in exactly addressing what you're talking about is I think by covering quite a few companies and every quarter and throughout the quarter getting exposure to a bunch of companies and seeing what is the ground truth of what's happening at that business level, is you can start to see when do growth outliers pop out, and are those durable and sustainable, or is someone getting exposure that's out of character and they're simply just chasing the newest and hottest fad. As of now, I have not surfaced a business that we own that is, those flags are popping up for me, and I think that's a really good and grounding thing. But it's something I'm very aware of, and that I need to be attuned of, because that could be the surfacing of a problem, and I don't want to stick around if they start chasing those types of things.
Yeah. I'm also just thinking about new companies as well, like when we're looking at new businesses. I think it's a similar pattern. I think, when you think about investment, when things aren't working for you, sometimes you want to pivot, right? And I think one of the things I like the way we manage money is we don't pivot. If low quality is working, high quality is not, we're not going to invest in low quality to chase that performance. However, doesn't mean we're, myopic, doesn't mean we keep our head in the sand. We are still looking, in my opinion, for those companies, again, like an MCOR, that can, down the road, have some exposure without giving up any of the characteristics that we look for in a good, high-quality business. Would you agree with that?
Yes, and I think one of the funny things that we get to watch as market participants is we get to see some real irrationality jump in. And so we're doing our best to stay away from those types of situations, not being involved with management teams that have that type of strategic, that they'll blow wherever the wind goes. And so we're going to steer clear of those types of things.
Yeah, and I think that's the message that I want to always convey to our clients is, this is a difficult time. I understand that, but I think the question is, what are you going to do? Well, the answer is we're not going to pivot. We're going to stay who we are as investors. And we know eventually that does come around our way. And I think, but we do need to always look for those companies that do have that enduring competitive advantage. And I think, is there any, let me ask you this question, because I'm just thinking about this the other day, is there any, you think about industrials, and we talked about the water treatment area, right? Talked about consulting, talked about things like MCOR. Are there other areas in industrials that you've kind of looked at? I know sometimes we'll look at maybe even aerospace and defense. That I've always, we have a couple names there, but I also think about those names in terms of concentration of maybe DoD exposure or something like that. How do you think about when I think about aerospace and defense? What do you, anything different you're looking for in that area?
I think the aerospace sector has some really unique attributes that make the barriers to entry to that business very, very high. And that brings along some really unique opportunities and situations where certain businesses have very, very advantaged competitive positions. And I think what's really important there is we have this massive regulatory barrier where for commercial aerospace, parts used on a plane have to be approved by the FAA. And once you're approved by the FAA and an OEM, a Boeing or an Airbus decides to use you, it gets very difficult for an outside competitor to try and dislodge that part. And so these are very durable and sticky businesses once they become embedded with the customer, and they're very long life programs. And so think when a 737 goes into production and gets delivered to a customer, it's got a 30-year tail life of using that. And so aftermarket parts and going into that, it's a very sticky and good business. And so I think one of the tailwinds that industry is experiencing right now is Boeing and Airbus have hit some bumps along the way, some real turbulence, pun intended there, over the last 7 to 10 years. And the market's trying to catch up, and people have continued to fly, GDPs continue to grow, and so travel just continues to be a more important part of the way that we live as a society today. And so aerospace has a real tailwind here. Defense companies, both in the US and Europe, countries are ramping defense spending, and so there just seems to be some real legs to that. And so that's something we're watching very carefully, and we have the ability to take advantage of as we just benefit from long-term secular growth as companies, societies, and governments across the world spend more in the space.
Yeah, I think that diversification is really what it's good to emphasize again, right? Because it's like you don't want to. I think the companies we do own have that commercial aerospace exposure, but they also have the defense exposure, but not like 90% of one or 10% of the other. So I think that diversification is really, really important. Again, it epitomizes what we look for in these types of companies. We're looking for balance. Right?
And I think we can also throw in is not only that, but we're emerging and growing into the new frontier in space as we're seeing multiple companies pursue new space opportunities, and also just the existing business of deep satellites and getting those parts and opportunities and growing with that as well.
You know, one of the things I've also been thinking about too is, and I get a lot of questions about this, and that people are like, well, how are your companies integrating AI? And when I think about that, I get excited because I actually think that our businesses and industrials or others, I think they're just getting going. And I think we're barely in the first inning for where our companies can utilize AI. I think AI is just so different in that, unlike the internet bubble, which I thought was a little more one-dimensional, this is something that can impact revenues, something that can impact costs, so margins, right? And I think it's real interesting to look at the opportunity here for our businesses. And you know, you're listening to calls, I'm listening to calls, and I think they're just barely even scratching the surface on how they can utilize it. Right now, everyone is benefiting, and this makes sense. Hyperscalers are benefiting, companies that are just getting the contracts from the hyperscalers. So the quantitative measurement, we don't know yet, right? However, those companies are being benefited first. In my opinion, down the road is where I get excited, because I think our companies, as they utilize AI, revenue opportunity, margin opportunity for companies that are already growing very sustainably and very consistently. So I think, in my opinion, AI is something that we're going to have the tailwinds longer term. Right now, it's not benefiting us, but that's where I get excited. Do you feel kind of the same way, or how do you think about it?
Very much so. I think the opportunity to leverage AI across the cost base and sales, general and administrative, brings a lot of opportunity for these industrial businesses. And again, I fall back on the most important thing for the competitive moats of these businesses, largely, and the industrials that we own, is reputation matters a lot to division, and they're delivering physical atoms. And so it has to be a high quality and durable product that the professional end customer knows is going to work over time. And then they augment that. There are multiple industrial businesses that you have to do maintenance and service on these products once they're in the market. And if you don't have the existing scale to service and maintenance those, it's really hard for a new player to enter. So it gives the existing industrial companies with durable moats already, it kind of gives them a supercharged way to cut some cost here.
But I also I don't want people to think that our businesses are impervious, right? So I think one thing that's happened in the last year or two is I think our guard is up a little bit more in terms of, again, I keep talking about this technology disruption. We got to make sure that our businesses and their moats are not going to be incurred upon. And I think it's just another variable to look at before we look at competitive advantages in a lot of different ways. Now we're adding AI in terms of making sure that, Sean and Jon can't just all of a sudden these two coding guys come up and totally supplant us in terms of that competition. So I think it's for us, I don't want to give anybody the impression that we're also in this, AI is this and we're not worried about it. We are concerned about it from a competitive standpoint. And I think we have our guard up even more to make sure that our businesses are going to be able to get through this. And I think the reason that I have confidence in these companies, see if you agree with me, is because they already have that moat in terms of brand, in terms of regulatory, in terms of being low substitutability. They already have a lot of that. Now, if somebody else can come in and take that market share from them with a small company, then that business model is on a house of cards, right? And that should not be in our portfolio. But I think now we're always looking for that to make sure that house of cards is not a house of cards, but actually built on very stable, steel infrastructure. How do you think about that in terms of when you're looking at companies? How are you now integrating AI in terms of your competitive model?
I think that's a great question. I think qualitatively, it's reading and understanding of how are these businesses using it and how are they noticing if there's any outside threat and if they're calling it out. And then I think quantitatively, we can also just adjust or monitor and look at how's the unit level profitability, how's the intensity from a marketing or sales perspective? Is that changing for the business? And then just overall, is the return on tangible capital maintaining, getting better, or getting worse for the business over time? And so it's this balance of the squishy qualitative that we as individuals get to leverage our experience and exposure to these industries for over long periods of time to understand whether management teams and businesses from a ground level are able to survive this, and we get to use our experience to leverage, to think through that. And then quantitatively, we can look at unit level profitability and the other things I mentioned to get some ground level truth to kind of confirm of whether we're on solid ground or not.
Yeah, it's an interesting topic overall because I feel like in the AI landscape, the field is being planted still, right? And that's difficult to sustain or maintain or figure out what the playing field is, who's going to win. And I think that's why it's a challenge for us. But I also want to make sure that we're looking at the right businesses with those opportunities in place as well. So, are there any? Have you thought about any? Industrials is a nice sector because within industrials, there's all these different ones. We talked about water treatment. We talked about, even like credit bureaus are in there as well. Mm-hmm. Are there any areas you think within industrials that might be interesting at this moment? Or do you think it's just kind of, the same?
I mean, I'm sure there's change that's, underlying change that's happening across industrials. And I think my true North Star that's guiding this is I'm constantly on the search to try to improve the industrial businesses that we own, improve the quality of the industrial businesses that we own. And I think we have a very high quality batch as of now, but if I can ever find a higher quality business, that's great. And we'll take the lower quality business out and put it in there. In terms of disruptive or new opportunities, I think there's a lot to be said of figuring out where you don't want to go from an exposure here. And we're seeing some businesses with very high customer concentration to the hyperscalers, very, very high growth rates. That's leveraged to the build out of the data center infrastructure and just AI in general. And with my inability to call that as a cycle, I don't have the confidence to be involved with those businesses and expect that their pricing power stays the same the moment that a demand blip shows up, which I think is likely. And I don't know when or if a demand blip will show up, but if it does, I don't want to be owning the business that all of a sudden their pricing power and economics drastically change because of that their very high customer concentration exposure and all the excess supply that's coming into that market. So I think the best way that I can answer that question as of now is figuring out what places to steer clear from.
Yeah, it's an exciting time right now and a lot to think about. And I know we'll have ongoing conversations about this in the future. So thanks for chatting.
Yeah, it was great sitting down with you, John.
Absolutely.